Now let's talk about the fundamental ethical principles that we need to comply with. So we have five principles, which are professional competence and due care, integrity, professional behavior and confidentiality, and objectivity, of course. And and as such, you need to be capable of talking about them. So let's talk about them in detail. So, what is professional competence and due care? Actually, there are two main considerations when we are talking about professional competence and due care. First of all, you are required to have the necessary professional knowledge and skill to carry out work for clients. So, if you don't know your stuff, probably you shouldn't get the job. And accountants also must follow applicable technical and professional standards when providing the professional services. Appropriate levels of professional competence must first be attained, so by, let's say, finishing your ACCA, and then maintained. So you have to make sure that you engage in continued professional development CPD requirements. Integrity is to be honest. So it's fair dealing, it's truthfulness. So, ICCA members are also required not to be associated with any form of communication or report where the information is considered to be materially false or to contain misleading statements, provided recklessly, or to be incomplete such that the report or communication becomes misleading by this omission. Professional behavior. Professional behavior means that you need to comply with all relevant laws and regulations. And there is also a test whereby actions suggested by a third party, which would bring discredit to the profession, should also be avoided. We would be required to treat all people contacted in a professional capacity with courtesy and consideration. So, similarly, any marketing activities should not bring the profession into disrepute. So, we cannot say, oh, we are better than anybody else. Confidentiality. Confidentiality means to respect the privilege of the information attained. So, information obtained in business relationship is not disclosed outside the firm unless there is a proper and specific authority or unless there is a professional right or duty to disclose. So, for example, when you know about the fraud, then probably you would need to disclose it. Confidential information acquired during the provision of professional services is not used to personal advantage. The need to maintain confidentiality is normally extended to cover the account and social environment, information about prospective clients and employers, and where business relationships have terminated. So basically, there must always be a reason for disclosure before confidential information is provided to a third party. And the main reasons for these disclosures are when it is permitted by law and authorized by the client, required by law, like, for example, during legal proceedings or disclosing information regardless infringement or law, and there is a professional duty or right to disclose. So when not barred by law. So, for example, provision of information to the Professional Institute of compliance with ethical requirements. So that confidentiality, and finally objectivity. So when we're talking about objectivity, we say that we should ensure that our profession, our business judgment is not compromised because of bias or conflict of interest. However, there are many situations where objectivity can be compromised, so a full list cannot be provided, and we are warned to always ensure that our objectivity is intact in any professional or business relationship. Now, when you have questions about the code of ethics, you need to make sure that you talk about each and every principle individually. As for the threats and safeguards for accountants, let's talk about them. So, the threats to independence of actions and conflicts of interest are going to include advocacy. So, what is advocacy? Advocacy means that we are going to promote clients' interest elsewhere. And advocacy threat is going to arise when we, let's say, are in dispute or somehow advocate. And the relevant safeguards are going to be using the different departments in the firm to carry out the work, making full disclosure to the audit committee, and withdraw from an engagement if the risk of independence is considered too great. Now, once again, what would be the examples of advocacy threat? Dealing in or being a promoter of shares or other securities in an audit client, or acting as an advocate for on behalf of a client in litigation or in resolving disputes with third parties. The next threat is self-interest. Self-interest threat occurs when the audit firm or a member of the audit team could benefit from a financial interest in or other self-interest conflict with an audit client. And yes, we are talking about auditing here, well, because that is what ACCA is mostly concerned with. So, for example, in an external audit, in the context of direct financial interest or material indirect financial interest in an audit client. And in this case, they would not be motivated to put the right entries, the right adjustments. Loan or guarantee to or from an audit client or any of its directors or officers. Undue dependence on total fees from an audit client. So we probably know that the interest from the gain from the audit client should not be higher than a certain threshold. Potential employment with an audit client or contingent fees relating to audit arrangements. Intimidation. Intimidation means threatening someone. So it occurs when a member of the audit team may be deterred from acting objectively and exercising professional skepticism by threats, actual or perceived, from the directors, officers, employees of an audit client. So, for example, in an external audit context, the threat of replacement or a disagreement regarding the application of an accounting principle, or pressure to reduce inappropriately the extent of work performed in order to reduce fees, or dominant personality in a senior position at the audit client controlling dealings with the auditor. And similarly, within the company, if we have very dominant CEO, then this could be an intimidation threat. In an internal audit context, it would be where the promotion prospects, pay rises, or other rewards of the auditor can be influenced by the manager of a department being audited. Familiarity. Familiarity means to be friends, to have too much of a relationship, so very close relationship. Well, for example, where auditors have worked within a company for many years and have long-standing relationships with employees and management across a number of departments, including when non-executive directors have worked for a company for many years and as such have long-standing relationships. And that's why we need to rotate them. Acceptance of a gift of hospitality unless the value is clearly insignificant from the audit client, its directors, officers, or employees. Long association of a senior member of the audit team with the audit client. And self-review. Self-review means that someone is put in a position of reviewing subject matter for which the firm or individual was previously responsible. So, for example, in context of the external audit, it would be performance services of an audit client that directly affect the subject matter of the current or subsequent audit engagement, and preparing original data used to generate financial statements or preparing other reports. So, for example, auditors cannot prepare financial statements and audit them. In the context of internal audit, we would say where someone has recently transferred within the company into the audit role and is found to be auditing their old department. So these are going to be our threats. So we have discussed that. And yes, let's talk about the safeguards. So for advocacy threat, it would be using different departments in the firm to carry out the work, making full disclosure to the client's audit committee, and withdrawal from an engagement if the risk to independence is considered too great. As for self-interest threat, the safeguards to self-interest threats would be not to put KPIs in that are going to put that into danger. Well, when we're talking about the self-interest threat, it's actually quite complex. So with the self-interest threat, we say that it happens because of family or close personal relationship. It happens because of the contingent fees, when client lends a material amount of money, when there is valuable gift or hospitality, when there is a large, when the audit firm depends on the client's fee, a partner or employee on the board of the audit client, and lowballing, so when a firm quotes a significantly lower fee level for an audit service. And the safeguards to those are going to be discussing the issues with the audit committee of the client, taking steps to reduce the dependency on the client. So, for example, reducing the size of the engagement or getting more clients. Consulting on independent third parties such as ACCA, maintaining records such that the firm is able to demonstrate that appropriate staff and time are spent on the engagement, and compliance with all applicable audit standards, guidelines, and quality of control procedures. As for the intimidation threat, the intimidation threat arises so when we are deferred from the activity by threats. So this would be the threat of dismissal, the threat of litigation, and pressure to reduce fees or salaries. And the safeguards would include the disclosure of such threats to the audit committee for their consideration, review of work for any evidence of bias, and even the possibility of removing affected individuals from the area under threat. As for familiarity threat, the safeguards would include rotation of affected individuals away from the position. That's why we have this maximum periods of the board and so on. As for the self-review threat, the self-review threat is where an audit firm provides services other than audit services to an audit client. So, for example, by providing multiple services. And for the self-review threat, we are going to obtain a quality control review of the individual's work and assignment. We are going to discuss the issue with the audit committee. We will remove the individual from the team. If the threat is to have custody of an audit client's assets, supervising client, employees, and so on, then we will need to ensure that non-audit team staff are used for these roles. We need to involve independent professional. We have to have some quality control policies on what staff are and are not allowed to do for clients, making appropriate disclosures to those charged with the governance, and resigning from the audit engagement if the threat is perceived to be too high. Also, as for the self-review threat, if the threat is preparing accounting records and financial statements and then auditing them, so the safeguards would be using staff members other than audit team members to carry out work, obtaining client approval for work undertaken, providing valuation services where audited financial statements include figures generated by the valuation. Well, we will have to use separate personnel. We will need to take second partner review. We need to confirm that the client understands the valuations and assumptions used and ensure that client acknowledges the responsibility for the valuation. Provision of internal audit services to an external audit client is permitted in most jurisdictions, but not in the US. And the firm should ensure that the client acknowledges the responsibility for establishing, maintaining, and monitoring the system of internal controls, despite the fact that it's this audit firm that gives them employees for internal audit. And yes, so these are the main threats and the safeguards, and we need to do the right thing. So we need to put the appropriate safeguards to protect ourselves from the threats. And that is it. Thank you.